Welcome to Cooking the Books. I'm Frances Cook. It's something we'll often say on this show. We talk about the general rules of how money works, but after that, you have to apply it to your own individual situation. If things are complicated enough, you might want to look for a financial advisor to help you. But if the letters coming into my inbox are anything to go by, people are quite worried about how they pick the right person to advise them. Fair enough, too. Bringing in a professional to help with something so important has a weird power dynamic. You have to trust that they're handling your money in the way that's truly in your best interests. Well, the Financial Markets Authority has actually just overhauled the rules in this area, aiming to give you more protection in this exact situation. So, what's changed, and how do you find the right person to help you make good money moves?
News Talk ZB presents Cooking the Books with Frances Cook.
I'm joined now by Gillian Boyes from the Financial Markets Authority. Now, it's something we'll often say on this show. Obviously, we are talking general rules of the game when we talk about money. And if you want a specific solution to your problems, then it's individual advice from a financial advisor. But people can come unstuck, I think, sometimes when they try to then take that next step. So, what are some of the situations where you might want to seek out a financial advisor?
Okay, so I think for a lot of people, it's the big money decisions. So if you're getting a mortgage and you just don't know where to start, a financial advisor can help with mortgage discussions and negotiating with banks on your behalf. If you're getting insurance, particularly personal insurances like life insurance and critical care, they're really complicated products. So it's really, really good to talk to a financial advisor in that situation. And then the other one is around investments. So a lot of people like to work with an advisor, particularly people about 10 years out from retirement. They tend to, that's the most common time for people to go and get investment advice. They suddenly go, whoa, we haven't got enough. And an advisor can help, work out a plan, but also into retirement. So a lot of advisors work with people to help them spend their money. So those are usually the big triggers. It's usually the big money decisions is what triggers financial advice.
Yeah, and I often think that the big life changes are a moment to just check in on not only your own goals, but also how you're going to achieve them. And I love what you said there about spending through retirement, because that is something that is more complicated than people often expect. I mean, building up wealth is one thing, spending it so that you don't run out is entirely another. But of course, we have also just had big changes around how financial advice is regulated in New Zealand. So what went wrong before, do you think, and how has that changed?
Well, it wasn't so much that things went wrong. It's just that only part of the story was completed, if you like. So new rules came into place for investment advisors, and they had to be licensed and they had to follow a code of conduct and so on. But those rules didn't apply to people giving mortgage advice or insurance advice. And they operated under some different rules, and we weren't able to regulate them as effectively. So it was really about evening out the playing field. I think initially they maybe thought investment advice is the most complicated, but actually, as I said, insurance products are complicated. Mortgages, a lot of people talk to a mortgage broker when they're buying an investment property, for instance, or making quite complicated decisions and trade-offs. So all of those advisor types need a really good level of skill, and that's what the change has brought in.
And a really big emphasis, I think, in this rule change on that you have to put the client first, that seems really emphasized. What are some of the ways that you've tried to really codify that?
Yeah, so putting the client first all sounds a bit kind of complicated, doesn't it? But it really just means that rather than, if you walk in to see an advisor, rather than starting to talk about a product straight away and being a salesman, which I think perhaps some people think, advisors in the past have been, they're required to put your needs first. So they're required to have a conversation with you about what do you actually need, what are your goals, what are you trying to do here, and then find a product to suit those particular goals. So in terms of the rules around it, there's a code of conduct which sets out certain things that the advisor has to do, like treating you fairly acting with integrity, explaining products really clearly, and that's a really important one in financial services because, you know, they can be complicated. And then they also have to have levels of competence and skills. So it used to be that, you know, someone could start selling insurance after a very short period of just registering and getting some basic facts from the company they're working for, and then they're, you know, on the phone. And in the new world, they'll actually have to have, you know, a level 5 certificate, and then they'll have to have specific training on insurance as well. And that training covers things like ethics and how to treat people fairly and so on. So yeah, some really great changes that'll just mean that the quality of what you're going to get is so much more.
And I do think it's such a big responsibility, right? When you are helping people with their money, I feel rightly, people feel quite vulnerable there. Are there any litmus tests that people can use to double check that their advisor is following the rules and putting their interests first?
Yeah, so the fundamental one is you can check that they're licensed or working for a licensed financial advice provider. So that's something they have to, you know, disclose up front. And disclosure used to be about giving you a piece of paper that said, you know, 100 things that no one read. So now what happens is that the disclosure happens at different times. So if you go to someone's website or you ring them, then one of the first things they've got to talk you through is, here's how I'm licensed. So you should look for that, and then you can go and check that up yourself. So if you've got any doubts, you can go to the Financial Service Providers Register and check that they really are what they say they are. And then you can check things like, you know, are they making me feel comfortable? And a lot of this does come down to a personal relationship. So, you know, when you're trying to find an advisor, hopefully it's someone you'll work with for a long period of time. So you don't want someone who's going to make you feel silly or foolish for asking questions, and someone who, you know, genuinely, you know, cares about what your situation is. And yeah, just doesn't leap straight into, oh, well, I think you should do this or that. So some of the other things they have to do, they have to actually tell you up front what they're qualified to do. So for instance, if I were qualified to be an investment advisor, I would say that I can do investment advice or investment planning if I had that qualification. But you would know that because I've said I can do those things, I can't give you insurance advice. So you can't just do a bit on the side, if you like. So look for that sort of thing as well.
And you made a couple of really good points there that I want to pick up on a bit. When you talked earlier about sometimes people are worried that they're going to see an advisor and they're going to be a bit of a salesman instead. That is something that people have messaged me about time and again. They're very worried. And of course, we've had, there's different ways that people have been able to charge for financial advice. They can charge, of course, you a set fee as a client, or they might get commission from financial products they sell you. Sometimes it's a mix of both. Now, is that something that can still happen under these rule changes?
Yeah, so you can charge in different ways, exactly as you've said. So a fee up front or a commission. And I know the government looked at the commission model, but you know, what they decided in the end was that, you know, we don't have a problem with commission per se. You know, advisors have still got to make a living. And with things like insurance, you know, people actually aren't that keen to buy insurance anyway. It's always a bit of a grudge purchase. So imagine if you had to then go and get charged thousands of dollars to get your insurance policy set up, and you had to pay that in addition to premiums, for instance. So the way the products have been developed is the commission is built in, so you don't actually have to hand over some dollars. The product provider pays a commission to the advisor for that. But what's different under the regime that's now come into place is the advisor has to be really upfront and tell you all about those commissions. So then you can make an informed decision about whether they're putting your interests first. So for instance, the advisor might have to say, hey, look, with provider A, I'm getting paid a commission of, you know, $10,000. With provider B, I'm getting paid a commission of $14,000. But based on the needs that you've told me about, provider B is going to meet those needs more effectively for all these reasons. So Yeah, so when you're having those conversations, you can then assess whether the advisor is actually kind of going with provider B because they're going to earn more, or whether it's because they actually really do meet your needs much better.
Yeah, and I think that fee structure one, it's difficult, right? And I find myself in two minds about it because personally, and this is entirely personal opinion, if I was going to see a financial advisor, I would want to know there's no way that they can even a little bit be tempted by a bigger commission on things. I would rather pay up front. But then again, I'm lucky enough that if I went to see a financial advisor, that I could pay them up front, that I could say, what are your fees? And I would rather pay. There are some people for whom paying anything at all is just out of the question. And I don't want them to not be able to get financial advice. So I feel like just having to be so upfront, and I mean, even you can ask questions at any time and you can really grill these people about the different fees. And like you say, they're supposed to tell you. I feel like getting everything out in the open is probably the best midway solution we've got, right?
Yeah, yeah. And I think, when you're asking about the fees, and some people are really uncomfortable about this. So people have different approaches to getting advice. Some people they don't know anything. They want the advisor to tell them everything and, please just take away all my money problems. But other people are perhaps wanting an advisor as a sounding board. And so they will, be prepared to challenge and ask about things. And the fact that, the commissions are now something up front, and also they have to tell you, for instance, how many providers they work with. And again, this is something helpful because if you're the sort of person who's quite thorough with your decision making in particular, if you know that this advisor will only ever work with companies A, B, and C, and in fact you want them to work with all of the companies, then that gives you an opportunity to find someone who perhaps could give you more of a choice, because you may feel like you would miss out if they didn't work with all the companies. So yeah, look, they have to be upfront. They have to tell you before you go and see them the basic nature of how they're paid. So you can decide, if you're not a commission gal, you can just go and look for someone who is a fee person. And that's a perfectly legitimate choice. And it means you're not wasting each other's time by having a whole big advice conversation and then finding out that they're going to charge you in a way you're not comfortable with. And then once they actually really understand what you need and they're recommending a product, then they have to give you a whole lot more detail about this very specific fees that apply to you. And they don't have to put that in dollar terms, but that's something as a consumer we recommend that you ask about, because sometimes fees can sound quite small. I charge you 0.5% commission or something. That sounds tiny, but on a mortgage over a long period, that could be, tens of thousands of dollars. So it just gives you more rights and more ability to ask those questions, and it's one of those litmus test things. So if they're not prepared to go there with you, or they're a bit funny about it, well, they should tell you these things, and that would be one where perhaps you'd think about walking away.
Yeah, and I think spot on there as well about asking where the fees come into place and also how they're applied. Don't be afraid to ask 1,000,001 questions as you're getting to know each other. One that I run into all the time with people is that they'll often think with investments. You'll see often different platforms or whatever, they might be charging a 1% fee or something, and people will think that that's 1% of profits. And it's not. It's almost always 1% of everything you've invested through them. So maybe you get a 7% return that year, and then you pay 1%, you're down to 6% profits that year.
Yeah.
And people don't often realize that that's how it works. So make sure that you are asking all those questions of, okay, it's this percentage fee applied to what? And it's on them to walk you through it so that it's totally understandable, right?
Yeah, no, look, that's right. And, investments are quite confusing. There's layers and layers of different fees because, the advisor has one. Often if you're using a fund, they'll have a different fee. So, it is layers of them, and you need to be talk through it. I should just say, though, we did some research a few years ago now with the clients of financial advisors. and 95% of the clients said they thought their advisor was good, very good, or excellent value for money. So, you know, if you've got the trust of an advisor and they work with you over a period of time, I think people just really value what they get. So I think sometimes we sort of, you know, get a bit hung up on the fees question, and it's really good to understand exactly what you're paying and so on. But also remember that they're providing you with a really valuable service, helping you make better decisions. And you know, the fantastic stories, you know, we hear from advisors and their clients about when things go wrong, how the advisor can help, or for a lot of people, it's about having someone they can test a decision with. So they'll be on the phone to the advisor and go, do you think I should do this? And the advisor's just got that non-emotional thing. They know who you are. They can kind of talk you down off the ledge if things are going a bit screwy. And that's what the fee is paying for, is just kind of helping you stick to your course.
And you mentioned as well a couple of times actually in this chat, and I think it's a really good point I want to come back to, is the match between personalities. I mean, one of the big things that I would hope that it would be a conversation in any first meeting with an advisor, I would hope, is what are your life goals? What do you want? What makes you comfortable? What makes you uneasy? You know, because so much of money, right, is it's not just what are the rules of the game, it's what do you want, and then how are we going to achieve that. I genuinely don't believe there's one thing everyone should be doing. And what you really don't want, right, is an advisor who doesn't get your goals or talks down to you terrible, or makes you feel uncomfortable asking questions, right? That there has to be that personality match too, right?
Yeah. And look, it's really fascinating the discussions you have. So my husband and I got some insurance advice a couple of years ago now. I'd previously just gotten my life insurance through the bank, and I must admit, we'd paid off our mortgage, which, you know, was very exciting. And so we just sort of thought, well, actually, you know, the kid's getting older. Do we really even need life insurance? And I said, look, I should practice what I preach and go to an advisor. So we had this really great conversation, and they talked to us exactly what you said about our goals and said, you know, where do you want to be? And what I hadn't really thought through was that insurance can help you achieve those goals. So the conversation they had with us was, you don't need to insure against, you know, being able to pay off a mortgage now. Now what you're insuring against is not achieving those goals that you have. So you've told us you want to retire early. That means, you know, you need to keep income coming in. If something happened to you, you need that income to be able to continue coming in so you can achieve that goal. And it was just such a, you know, revelation moment. I was like, oh, I just never thought of it that way. And yeah, they were great. And, you know, they spent the first part of the conversation really just finding about who we were and what our background was, what our personal background was. And you know, it can be quite a personal discussion too. So it is really important to have someone you can trust and get on with, and it's who's sort of on your wavelength.
Yeah, 100%. Now, I'm loving this chat. We're actually really close to running out of time because I'm enjoying it too much. There's a couple of points I want to whip through as quick as we can. One of the other changes that's been brought through in this overhaul of financial advice is making it easier to give robo advice, which I think is very exciting and a great change. So pleased to see that. Before, companies had to jump through a few hoops. They had to ask for an exemption to be able to give robo advice. So people might have seen it around, but it was difficult for these companies to be able to do. Now it's all under the same regime, of course. So how's all of that going to work?
Yeah, so basically they've written the legislation to be sort of neutral. So advisor isn't necessarily a person, it could be a computer algorithm. So no one now has to go through an extra hoop, as you say, and get an exemption. They can offer the advice in whatever version is most suitable for their clients. And we are starting to see, for instance, some KiwiSaver advisors are starting to roll out some digital advice tools. You know, a great tool in that space because it's a mass market, and you've got so many people who need that help. So that's it's a really great thing. I've seen some talk about insurance digital advice as well. So it's just reflecting, I think, that people have different approaches to how they handle money. And, you know, you and I have talked in the past about online investing platforms. People like doing things themselves, and going and talking to someone doesn't appeal to everyone. But being taken through a solid advice process on a computer, that can be fantastic. And I've looked at some of the ones in the States, for instance, and they're really cool. They've got amazing interfaces, and it still feels like a good, solid conversation, but I didn't have to talk to anyone and be myself. So this will really appeal to a lot of people. So I think it's a really great advance.
And I think that there's a really big gap there that robo advice can fill for people, right? Where I mean, I think of something like the sorted fund finder. I'm not even sure if that's complicated enough to count as robo advice, but it's for anyone who hasn't heard me rabbit on about this before, if you're thinking about KiwiSaver decisions, sorted.fundfinder.org.nz. And I recommend it to everyone, because all it does is run you through some questions of, you know, how uncomfortable do you get with market swings? How soon do you plan to use your KiwiSaver? And it sorts you into categories of, okay, this is most likely the good option for you, of whether you need growth or conservative. And, you know, here are some good funds that are ranked according to your priorities. And sometimes all people need to know is, here's a general rule of thumb. Most people in your situation want to do something like this. Here are options for you. Sometimes that's all that's needed, right?
Yeah. And look, I talked to some of the big fund providers after the market volatility last year, and they said, look, if we could have rolled out a digital tool to help people understand what to do when their investment suddenly dips, that would have been fantastic, because, you know, our phones were overloaded. We know that people were looking for help. We did some analysis of what was going on in social media, and, you know, it just went through the roof. Everyone was going, what do I do? What do I do? So they just need that sort of general, you know, keep calm message. This is normal. And, you know, and here's what to do next. And a lot of that can be done digitally. You know, you don't need to sit down in every situation. So, yeah, I think it's a really cool thing.
Yeah, no, I was really pleased to see that change coming through. I thought it was great. Okay, so if someone is thinking that they do want to have a chat to a financial advisor, they have some ideas now of what they want to talk to them about and how to approach it, but they want to find a good, trustworthy one in their area, where do you start even looking?
Yeah, so if you know a name, then you can look it up on the Financial Service Providers Register. Because the regime's brand new, that register doesn't let you kind of go and do a search in, you know, central Wellington, which is where I am, for instance. So there are some financial advisor associations that do have that facility. So we've got links on our website to those. So it's the likes of Financial Advice New Zealand, and the insurance IBANs, I think, has that as well. But what a lot of people do is they ask around for recommendations, and it's a bit like, you know, if you're trying to find a decent tradie, you know, you ask your friends, don't you? Because, you know, you could just look up the phone book and try and find someone. But, you know, it's usually more useful to kind of get some recommendations. And if you're dealing with your personal networks, then probably they've found someone who's maybe in a similar age or similar gender to you. So that can also be a really helpful way to start. So yeah, so those are some ways to do it. But yeah, once you've found your person, you can just double check that they're licensed and regulated by us by checking on the Financial Service Providers Register.
Love that. And you mentioned that there are some links in case people don't have a friend who uses an advisor. You mentioned there's some links on your website to good places to look. Where would people find that?
Yeah, so we've got an investors section of the website, and we've got a whole section on getting financial advice. It talks you through what to expect. It talks you through how to find one. Gives some really specific examples about, you know, what to look for if you're getting mortgage advice or insurance or investment advice. And it also talks about how the FMA regulates advisors, because this is, you know, the other big part of the change is now that we've got the mortgage and insurance advisors in our licensing framework, we can go and monitor them and check that they're following the rules and doing, you know, what they're supposed to be. So the public can have some greater assurance that they really are doing what they're saying they're doing.
Yes, which is always very helpful in such a vulnerable area. Thank you so much. That's Gillian Boyes from the Financial Markets Authority. Now, if you have questions about this podcast or anything else to do with money, do send them through to me and I'll try to get them answered for you in a future podcast. I crammed lots of listener questions into this one, so if you have more, send them through. We can always do a follow-up. You can find me on Facebook, Frances Cook Journalist, Twitter, Frances Cook, Instagram, Frances Cook NZ. You can also subscribe to Cooking the Books. Some of the other episodes might answer your questions anyway. We're everywhere you find podcasts, including iHeartRadio, Spotify, and Apple Podcasts. Until next time, have a great day.